This is Innovation Connected, coming to you from the World Economic Forum in Davos, a podcast by Tenity.
My name is Max Planck. I'm a venture partner of Tenity, and I would like to welcome my esteemed guest, Ronit. Welcome.
Thank you, Max.
Glad to have you here.
It's awesome to be here. Also, my son is called Max, so it's kind of funny being interviewed by a Max.
Oh, well.
There you are.
That's a good start, I would say.
Start.
Can you give us a quick summary about your background?
Sure.
And
why I have a son called Max?
That would be also okay to say that.
So I run a think tank for Citi. It's called Future of Finance. We set this up 3 years ago. Think of us, like an institute. We're not an academic institute. We provide analysis and advice for our clients. And pretty much every major company, government, central bank is either a partner or a client of ours. And then what we focus on is the crossover of emerging technology and financial services. With their blessing, I also do a bunch of external activities outside Citi. I sit on the advisory board of a business school in London, Imperial College Business School, on their financial technology center, and some startups in Dubai, where I now live. I've been based in the UAE since 8 years. And part of the reason I'm based in Dubai is I think it's a bit like I think it would be in London in the 1830s. London is my home, where I've lived most of my life. And just like if you were in London in the 1830s to 1860s or 1870s, you would have seen the future being built in front of you. Because I don't live there anymore, but some of my family lived there in this house in London. Like many houses in London, it was built in 1840s or something. Yeah. In America, that would be considered a historical monument. It's almost 200 years old, but that's when it was being built. Yeah. London was being built because London in the 1700s was really small. Most of what we know as London was built 1830s, 1840s to the early 1900s, the first and second industrial revolution. Now, some people call it the fourth, I think, did WEF come up with that term? I don't know. But the fourth industrial revolution, or whatever we're now going into, this AI-powered digital world, is being built in the Valley and the US, and is being built in all kinds of places around the world. And one of the centers where a lot of the capital and some of the entrepreneurs are being, based is in the UAE.
Mm-hmm. Okay.
Yeah.
So, what is a day-to-day? How does a day look like from a person who runs a think tank?
How does a day look like? Gosh, there's no fixed type of day. Today, my day started with a very long train journey from Zurich. Yeah. Our job is to keep a finger on the pulse, and maybe not that dissimilar to what you do, keep a finger on the pulse on emerging trends. So I spend the day today in either group meetings or one-on-one meetings with policymakers, with big company executives, and also founders and entrepreneurs. And one of the things we love doing is meeting founders and entrepreneurs because they don't just have an idea. I mean, we have an idea, we write a paper on it, or we invest in it. Yes. With some of my other hats on. Founders and entrepreneurs put their whole life into an idea. And I love meeting. I was just chatting to someone about intelligent agents and the difference in AI. Last Friday, we published a report on agentic AI in finance and the economy. And he was like, no, it's not about AI agents. It's about intelligent agents. And we had this really interesting conversation about intelligent agents and why they're different to LLM-based agents. So, and then I met a senior executive from a consulting firm, and every day is different. And that's when I'm in a good mood, that's what I like about my job.
What is when you're in a bad mood?
That's censored, and we can't talk about it. But
of course.
Some of my senior executives have watched this podcast. I doubt it, but you never know. So
absolutely, but
I love you all.
we can cut it, so that's not a problem. But you also mentioned investing. Yes. I think it's probably relevant to see if something is really relevant or not, because then there is more skin in the game, isn't it?
Yeah.
How do you see that as a corporate? Is this something where you're also involved at the bank?
No, so I don't. So in the bank, we have several investing arms. I'm not directly involved in it. The investing arms, Citi Ventures runs out of San Francisco and Palo Alto with outposts in New York, London, and around the world. Then we have strategic investing teams, desks in different parts of the businesses, mainly in New York and London, but also in Singapore and elsewhere. And we do interact a lot. So this report we published on Friday on agentic AI, many of my colleagues in the investing teams actually collaborated either in the content of the report or introduced me to founders. So in that report, in December, we spoke to 30 plus founders and senior executives. Many of those are portfolio companies of Citi Ventures. Little plug and shout out for them. According to independent sources, they were the most active corporate VC in the AI space. In 2023, I think 2024 as well, but for sure in 2023. And so we do collaborate. I also am an advisor to a couple of small independent VCs in Africa, the Middle East, particularly.
Can you say something about the report who just came out? I mean, curious also to learn more here.
Yeah, so it's publicly available. You don't need to be you can either just Google it or search engine of your choice. Just look at my LinkedIn profile. I've got a few posts on my LinkedIn profile and on Twitter with a link to the report. So what are we looking at is, so we kind of know the numbers, right? Biggest area of VC investing last year was AI, and the biggest subsector within AI investing was investing in digital assistants or AI agents. In terms of number of deals done in the AI space last year in the US. Now, what the report does is say why and what does this mean? Why now? Is it just a marketing spin from the big tech companies who need to shift product or find a reason to dominate the agenda this year, whether it's at Davos or at CES or wherever? And so we talk about some of the technology and LLM improvements in the last couple of years that allow us to have better agents, better bots, basically. But the more of the report, but the report really goes into what does it mean and what are the use cases? Because we're not technologists per se. We're looking at the application of technology in finance and money. And so we have lots and lots of case studies on emerging use cases. So how can you use agents to have better onboarding or KYC or credit flows, or boring stuff you could say, but really, really important, because oftentimes the reason a user, whether they're a corporate client or a consumer client of a bank or any big organization, feels frustration or unhappiness or a bad experience with that organization is just dealing with that organization is hard. So if you can make it easier to deal with these big organizations, client satisfaction goes up. They might feel better about us, maybe buy more product or be more loyal. So the report looks at the use cases. It also looks at implications. Like, what does this mean? I say in the report that we're all going to have our own digital Jarvis. So if you know the Iron Man movies, Tony Stark, the billionaire, trillionaire, whatever founder, who is obviously no longer just a mythical person. Reality is imitating art, or art, maybe art was imitating reality already. But in the old days, you had to be a prince or a king, or in these days, a billionaire, or, to have the kind of digital assistants that you see in the movies or you read in history books. We're all going to have it in a few years' time. Just like today, we all have apps. Like if I want to, in Dubai, if I want to order food at 10 o'clock at night, or I just want to get some groceries delivered for whatever reason, I go on an app. I click a few buttons, the food or the groceries arrive. We're going to have agents for everything we do using apps. And the really cool thing is going to be what digital has done in the last 20, 25 years has given all of us as individuals more power. Because 25 years ago, there was an information asymmetry. There was a knowledge asymmetry. So if I was a bank or a big company, I knew a lot more than you as a client. Today, the digital revolution has flattened that. The world has become flat when it comes to information. I can go online and if I want to check the price of, I don't know, any financial asset in the world, almost, not quite, but you can find it with a click of a button or a couple of clicks.
You find something.
You find something like, what's Trump coin trading at now? You can find that really quickly, right? What is the 30-year bond yield in the US?
Yeah, sure.
What is, are Greek treasuries trading at a better spread, a lower rate than French treasuries? You can find these things. 25 years ago, you probably have to call someone in a bank to find out that kind of information. And agentic AI will just take it to the next level where, I'll have an agent who'll say, Ronit, that account you have in your Dubai bank, this account is running low on balance. In 2 days' time, you're going to have a payment going out. In 2 days' time, you're going to get overdrawn. Now, do you want to do something now? I can move money from another account right now. Just click this button. Or I could give the agent minimal discretion. I could say, hey, up to a certain amount of money, just do these transactions even without asking me. Like the classic kind of IoT one of having an agent on a fridge. The milk has run out because one of my sons in Dubai, he loves drinking milk while he's growing.
This is Max?
No, Max is the older one.
Okay.
This is the middle one.
Okay.
So Victor's kind of emptied the fridge again. The fridge doesn't need me to open it up and say, oh, no milk. The fridge just orders milk, right? And then the question is, does it have a wallet attached to it? And how much discretion or autonomy do you give it? Can the fridge go and buy $1,000 of milk or $10 of milk? We'll probably give a $10, $50 type of number, right? Before the milk says, not the milk. The fridge needs to ask me for permission.
Yes, but for a financial institution, it's probably different than a fridge and a milk, right? Because they have maybe different regulatory frameworks.
Yeah, but you can use a lot of the existing principles in an AI or agentic AI world. And I'll come back to financial services, but what I was saying is that we'll all have an agent, a digital Jarvis, and what that does is it just further empowers the client or the user. And the really interesting question, which is the question we ask in the report, is who's going to be providing the digital Jarvis? Who do you trust to give you the agent? Because you want an agent who's working for you. Now, maybe we don't have an agent that does everything in our lives, but maybe we have a finance and serious stuff agent. Yeah. And then we have an agent for fun stuff or whatever. Or maybe we have super apps, right? In China and a few countries, you have one super app for everything, and then you have mini apps inside the super app. In the West and in India and the Middle East, you tend to have lots and lots of different apps. Yep. And I assume we'll have lots and lots of different agents. But who will be the financial services agent? Will it be the UBS agent? Will it be the NatWest agent? Or will it be actually Apple? Because we just delegate all our lives to Apple because we seemingly trust Apple, right?
Yes.
Or, I don't know, whichever smartphone of your choice. And then if it's the Apple agent, like I'm using Apple Pay all the time, it's running on the existing financial rails. There's a card and everything inside Apple Pay. But what happens in the future? Does that agent, basically do the banks have to sell to that Apple agent or the Samsung agent or whoever, ABC, decentralized? Some people say, no, I don't want to go for a big tech agent. I'm going to have my kind of decentralized agent together. And then do we as whatever we're selling, milk or financial services, we now have to sell to the agent. Yeah. And so that's kind of what we talk about in the report.
Wow, it's interesting. And you said also the why.
Yes.
Maybe a quick review.
You can edit it down. How many hours do we have?
No, really, just a quick.
Why it's happening now? Or
yes,
why
exactly, because he said that, the report says why is it happening now, or maybe why to invest now into that?
Sure, why it's happening now is because the main fundamental reason is that the technology has matured. So 4 or 5 years ago, we weren't really investing in or talking about AI in the way we've been doing in the last 2 years. So what happened? What happened was that in about 2 years, 3 years ago, initially to professional users and then to consumer users, generative AI models, LLM-based models were made available, and people began to realize, oh, this is something I can use in the palm of my hands. When I first read a report about AI and finance in 2018, I got very little interest. There was a lot of intellectual work being done and scientific work done, but the bankers were not interested, really. And the investors were not that interested in 2018. I don't know what they were interested in, probably crypto, I don't know. In 2018, they were not very interested in. And then by 2022, obviously with the launch of ChatGPT, and then in 2023, all they wanted to talk about was AI, because LLMs have got to the stage of basically perceiving and understanding information and using information that they could reasonably well imitate humans. So they're not human in a way, but they can pretend to be or imitate the human brain. And you needed that to happen before you could get on to agents rather than bots. We've had bots for a while, whether in the crypto world or the non-crypto world. Bots are simply something you pre-program. There's a set of defined rules and said, if this happens, that happens. An agent says, if this happens, that happens, and you learn. You can basically you can do actions and you can learn, and there's a flywheel of learning. And that we couldn't do 5 years. So the technology and the science improved, and there's a bit of a marketing angle here, which is we've talked about how wonderful Gen AI is for the last couple of years. And most people are saying, that's great, but I wanted to actually do something rather than just tell me something. And we've been in the show me economy or tell me economy. And this is a shift to the do it for me economy. And that there's a kind of business case or a marketing case for that. That's the why now.
Okay. I mean, I also asked a model.
Okay.
I put it in a profile, put it into a model, and asked about teasing questions for a podcast.
What do they say?
Yeah, well, they are here.
Okay.
So we have to be quicker on the questioning.
Make it quick.
No,
I'll make the answers quick as
well.
well.
But honestly, I really did it. So I mean, what interests me,
what did the model say about me?
Well, nothing. I didn't ask that. I just
what questions?
No, exactly. Put questions for a fireside chat with your profile, which is a summary about what you do.
Okay.
And also about your new book, The Future of Money.
Plug.
And why did you write it?
Someone asked me to. An editor pinged me on LinkedIn, and I ignored her. And then she pinged me again. So always send the second email.
100%.
So I ignored her because I was like, I'm too busy. I'm running a think tank. Before that, I ran financial research globally for Citi. I was like, I don't write. I spent 20 plus years writing. I don't want to spend my spare time writing. I do that for my day job. And then she was persistent. And I was going to London. The publisher was in London. And I said, I'll have a coffee with you. And she said, great. And when I met her, I said, listen, she flattered me, obviously. So that always works. So, she said, no, you'd be really good at writing a book. And I said, oh. And she said, no, you'd be really good at it. So I said, okay, fine. I said, but I will only do it if I can do something different. I spend my days and nights for the last 20 plus years writing these bank reports. I don't want to write about interest rates or profit margins or I want to write about the people and the ideas behind products and businesses. Because normally when you read something, a financial report or a newspaper article, you get something very serious. And actually sometimes things are built for very personal reasons. One of the stories we have in the book is of a decacorn, well, not yet a decacorn, but a unicorn in Brazil. And it was set up by a Spanish guy who was on a date in New York. And he met this lovely Brazilian lady. Spoiler alert, they got married and they're living happily ever after. But this was 10 plus years ago, and she was telling him about how broken Brazilian banking was in terms of margins and pricing. And she goes, and like every young man, he said, I'll fix it for you. I'm going to go and fix that. I'm exaggerating now.
Yes, sure.
But it was a great story. And he then got on a plane. He's Spanish, never been to Brazil, got on a plane and did some market research and then built a fintech.
Okay.
It took a few years to get product market fit. And then eventually they got product market fit. And then it's doing reasonably well. And these kind of personal stories of how businesses get built and why they get built, I don't think get covered enough. Also, I wanted to talk about things that are more global, because normally what happens is people write about or talk about what's happening in the US or what's happening in Europe or China. And I said, the world is like this amazing interconnected thing, and digital and information allows ideas and technology to spread so easily. And I wanted to write about businesses and people from all over the world.
Yeah.
So when people read the book and say, what's different about it, says it's truly global. It's not a book about America. It's not a book about UK. It's not a book about European fintech.
So you interviewed different people who build companies.
Basically,
in the space of future of money.
Basically, I interviewed them, but many of these people I knew for years.
Yes.
Because part of my job, I had, like when fintech was being kind of built in London 10, 15 years ago, luckily I was there. And some of the founders, like I write about Anne Boden and Starling, I knew Anne when she was building Starling in the early days. So it wasn't like I was interviewing them for the first time.
Yes.
Many of these founders, I had spent years watching them build businesses.
Okay.
And that's what the book's about. We also have at the back of the book, the last 3 chapters, more forward-looking projections about AI and things like that.
We need to speed up with that. I kind of ask more questions. I'm still on the first side. So maybe have very quick answers. What's the future of money? Who controls the future of money?
None of us know.
What's your opinion?
Future of money is we're going to have more users, individuals are going to have way more power over how they control and spend money because they have more information. And agents and AI will allow individuals to be smarter and more efficient about how they use money because most of us are inefficient and lazy about money because money is something we don't do for itself. We do it for something else.
Yes.
And I think the future of money is us being, as individuals, much smarter and more efficient. Now, for financial service providers, with the fintechs or banks, the challenge is that means you're dealing with clients and users that to make money from them, you have to serve them better.
Yeah,
you have to serve them more. There's a power shift. And there's been a power shift that's been going on for years from sell side to buy side in the institutional financial world. And it's going to happen in the consumer finance world as well.
What is your opinion on the combination of Web3 and AI? That's a very often said lately, that and was maybe a new rise also from Web3, where there was maybe a downturn in the past. What's your opinion on that?
AI and blockchain technology, if I can redefine the question, are independent and overlapping. We're going to be using, and we are already using blockchain technology, and we're already using AI, and we're going to do more of both.
Yes.
Now, there's an overlap where maybe blockchain technology could be a way to better track AI models, like the data, better qualitatively check what's in the AI model. Cryptocurrencies could be a payment instrument in wallets that AI agents have. You don't have to have a cryptocurrency wallet for an AI agent, but that's one option.
Yeah.
There's also, if I can be brutally honest, a huge amount of vaporware and just made up BS around AI crypto right now. But there's also real stuff.
Absolutely. No, I mean, it's just, I mean, when you look here on the promenade, then you see mostly these companies or these topics discussed or let's say very visible, isn't it?
Yeah, yeah. There's a lot of discussion on AI this year, like last year at Davos. And there's obviously a lot of discussion around crypto right now, in particular because of the changes in the US.
Yes, yeah. There's a big hype now going on again, right? What is the biggest takeaway you have from the World Economic Forum this year?
Biggest takeaways, AI is eating everything, number one. Number two, huge presence from maybe countries like India, the Middle East. It's very visible. Obviously, the timing of this WEF is coinciding with the US inauguration, so there's maybe less. There's some very senior US people here as well. I just ran into one of the most senior US-based financiers in a security detail as I was walking here. So there are lots of very senior US people here, but maybe there's some less technology representation from the US because of timing.
Yes.
But yeah, AI is eating everything.
So Thank you very much for being here.
Not at all.
I wish you a very nice last conference.
Thank you.
And hope to see you soon.
Thank you.
Thank you very much.